what we are doing today is risk management and entries. Risk management and entries. So now, calculating lot size correctly. Your lot size determine how much money you are risking per pips. What is pips, Mr. Valentine? Okay, he was not here, but you're supposed to know it. What is pips? I sent the notes to you, and I said your friend should explain it to you. So you should know it. What is pip? What is the full meaning of pip? What of Mr. Amos? Mr. Amos is not saying anything. So pips, percentage in points. The risk per pip movement. Your lot is too big, even a small move against. Okay, if your lot is too big, even a small loss move against you can blow your account. Now, your lot size, we discussed about lot size. We discussed about lot size the other time, and I said we have the standard lot, which is the highest. One lot, it is the standard lot. And then we have the mini lot. The mini lot is what? 0.1. It is the mini lot. And then 0.01 is the micro lot. And that standard lot is the highest in Forex. That is the one lot. So from that one lot, you can start adding 1, 2, 3, 4, up to 100 lots. So they are all standard lots because they stand on their own. They stand on their own. They don't carry any number. They are just like whole number. They are whole number on their own. So that's why they are called the standard lot. So now, when we say risk management, let's go to number 2. Risk per trade and risk management rules. Risk management is what separates professional traders from gamblers. Golden rules. Risk only 1 to 2% per trade. Never enter a trade without a stop loss. So you see people saying that they don't use stop loss. They say they don't use stop loss. I will be like, why can't you use stop loss? It's something that if you have any problem now, maybe you are not around or your network start having issue, even if it is not your network, you not using stop loss is just like your account is exposed to risk. You can lose at any fucking time. Sorry for using that word. You can lose at any time. So as a trader, you must use your stop loss. So now this place says you should risk 1 to 2%. 1 to 2%. So now in let me say in a $5,000 account, when we say you should risk 1%, 1% should be like $50 on $5,000 account. So it's just like you are risking $50 for $5,000 account. Okay, now let me use $100 for that example. Let me use $100 for that example. So this place is still the same thing. Like if you are trading $100 account, and then it says you should risk 1% of the $100. You are risking $1 per trade, which is not possible. So this thing now, you are supposed to know what you are supposed to use, the lot size you are supposed to use. As a professional trader, if it is not flip, you want to flip your account, because me, I don't believe in flipping accounts. Maybe I can start doing it when I have money that I don't know what to do with it. I'll start trying, knowing that even if I lose the money, it will not affect me. But some broke people, they want to be, they will fund $100, their life savings, and then they want to flip it to $500, $1,000, $5,000. How is that possible? It's not going to work. But you still see people struggling. That's why you see that most people today, they are not successful in what they are doing. It's not that they don't know how to trade, but the flipping mindset is still inside them. So now, what are you supposed to do? You are not even like supposed to say, let me be risking 1%. As a trader, you should know what you should risk, that it will not affect your psychology when trading. If you are risking, if you know that you risking $5 or $10 per trade in a $50 account, or no, let's use $100 account. You are risking $5 or $10 in a $100 account. You, with your mind, you should be able to know that either maybe if the trade don't go well, if I lose, it don't affect me like that, because I know that maybe before I even though no matter how worst I'm trading, or maybe the bad week I will be having, no matter what happens, I will not lose the money. So you having that mindset, it will even give you the main ability to be able to do something good. You cannot be trading $100 account and then you are risking $20 or $30 in a $100 account. That is not risk management, though. That is not risk management. So you can even see what I'm doing. If that's why most times I share my trade on the story. You see me, even the trade I caught here today on TP since yesterday. Guess how much was the stop loss? The stop loss was just $36. $36 and aiming for $200. And the trade went well. It went well. And inside a $5,000 account, which is the profit. And in that $5,000 account, let me say, in still that $5,000 account, I still have the room to lose $200 in a day, $400 overall. And then I'm risking $36 in such big account and aiming for $200. You should be able to know that the risk management is so tight and solid. As a trader, you're not supposed to risk much. I don't believe in risking much. So that's why you see that no matter how I hit stop losses many times, only one trade can be able to cover everything. Even the first trade I took on the first challenge, how much? I lost over $170 in that account, but my comeback was more than $500 on gold. I made over $500 in that challenge, covering the 170 plus dollars and also passing the challenge. So you can see what risk management can do sometimes. So all these things, nobody, I don't think there is someone that will come, or me, I'll start telling you that, no, if you are trading $100 account, use $5 or use $20 or use this amount. If you are learning from me, all these things, you know yourself very well. You know you are not supposed to risk too much. I will only tell you, don't risk too much. You should know how much you should risk, that it will not affect you. You should not have greedy or big eyes to catch big things with small money. It's not going to work. That's when flipping of accounts will start coming into your mind. So I think I have said much in this aspect. Now let's go to stop loss and take profit. Stop loss, always place it below, always place it beyond the structure, not too close to your entry. For buyers, below the last swing low. For sell, for sales, above the last swing low. Okay, now let's say you are buying from here or you are selling. Let's say you are selling, and this is your sell. Let's say you are selling, and then you enter. No, you are buying. Here is another one for buy. Let me use this for now. Let's say you are buying. You enter from here. Since you are entering from here, and then you are targeting something like this. Let your stop loss be like this after break of structure. I taught you break of structure the other day. Let's say this is a break of structure. You enter and your stop loss should be below these swing lows, although this one is equal low. But since there was a break of structure here, you enter from here and your stop loss there, and then you target this last high here, and you see you will still hit your TP. What if it is sell you want to sell? What if you want to sell? You want to sell, what are you supposed to do? Let's say you want to sell. If you want to sell, you can enter from maybe somewhere here, target this place. I taught you swing equal low. This place is equal low. This place is an equal low. I was the class I had with you the other year, I think it was yesterday. I was telling you that Bitcoin will hit this place, and it actually did. Because I took the trade and I know what was going to happen. So if you are in trade like this is how your stop loss should be, as little as this. While you can even take it from here, because this was how my trade was, something like this. You target equal low. This is equal low here. And then what happened? You smash TP. This place, your stop loss should be above this. You give it a little space here, because this one is your other block. This is your other block. Your other block, which is your supply level, is where sellers step in. Supply is where sellers step in to the market. So now, let's continue reading as we are going on. Take profit. Aim for a minimum of 1:2 risk to reward. So now, risk 10 to make 20. Avoid placing SL or TP directly on obvious levels. Big players hunt them. So now you are to trade, and then you don't know where to place. Placing your stop loss also matters when you are trading. It also matters. Now, if you are trading, this one they said you target 1 ratio, risk to reward ratio. That means you are risking 1% to catch 2%. I'm not a fan of that. I'm not a fan of that. So I won't preach that to you guys. Risk $20 to catch 20 to risk $10 to catch $20. No, 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 no. It's not possible. How can you be risking $10 to catch $20 profit? If you are risking $10, make sure the trade worth it. And if you're targeting something, target something big. At least for you risking $10, you should be targeting at least maybe like $35 or $40 in that trade, instead of getting ×2 of it. It does not worth it now. So you risking $10 to catch 20, it means maybe your strategy is weak, and you don't trust that it will go where you want it to go. It's just a waste of time. What if it don't go? That means you lose money on the setup that don't worth it. It will even pay you, because that sometimes I know if I take some trade that I know I'm not sure of it, and the trade did not let me say it did not deserve the kind of stop loss I'm giving it. I'm not always comfortable. I'm not comfortable. At least if I hit stop loss on a perfect setup that I was very sure of, and then it take me out, it will not pay me, because I settled down to analyze that market, and it still take me out. Either it take me out immediately and it started going my way, I jump in again and still take it, or it go well. That's always my plan. Even if you take me out and I still enter, it will not still pay me because I know it's worth that stop loss. It's worth it. So you should not be targeting $20 in order to catch $40. That one is weak trading. The trading is weak. Any setup should worth it. It should be quality. So now, just like I said here, any trade you are taking, even if it is sell, you target equal low. This was the equal low here, and it matched my TP. So all this thing I'm teaching you is something that I'm using. It's not something that it's not a strategy that I'll be using and then I'll come back. I'll be teaching you something different. You know, this thing I taught you yesterday. Is it yesterday or day before yesterday? And now you can even see it clearly. This thing still happen. It smashed my TP. And again, I want to show you something. If you are taking any sell or any buy, you make sure that you don't place your stop loss on equal highs, because there was a guy that fall a victim on that. One of my students, he's not in my signal group, and he's trading independently because he wanted to live without learning much, and now he's facing challenges. So now, this was what happened. Where is BTC here? This is BTC here. So if you look at this trade, let me remove this. If you look at this trade, you see that there's equal high here in this place. There's equal high here. There's equal high here. This place. This inside zone, these two candles here. Where is it? Yeah, this candle here. Inside here. Let me zoom in. So you can see it. You can see that they are the same. Let me put the line there. The same. These candles here, they meet the same place. What happened? So this place, this is what happened. The market was doing as if it's selling to this point. So immediately it reversed because he entered from here and then he put his break even, thinking, the market is going up, it's going up. And then what happened? The market from here went back to take this equal high out. You can see it. Look at the weak candle that was there. After taking it out, the market started selling massively. Look at it here. This candle here. With this candle, this weak candle here. Please, can you all hear me? Can you all hear me?
Yes, sir.
Can you all hear
Yes,
me?
sir.
Are you
Yes,
clear?
sir.
Should I
Yes, sir.
continue? Only one person is answering me.
Yes, sir. Yes, sir. Yes, I can go on.
Okay. So now look at this equal high. The candle was doing as if it started selling from here. And this 1 hour candle printed and still behave as if it was going. Immediately it went back to take them out from this equal high. And then started selling massively. And then I hit my TP. So if you start knowing all these things, you will not have problem. You have to be looking at any chart every hours. Is it 1 hour? Is it 2 hours? Is it 4 hours? Make sure you look all these time frames to see what is happening in these time frames. It can also help you in many ways. In many ways. So I have explained even beyond the place I was supposed to reach. So now let's go to the next one. Protect your capital first. Protect your capital first. Profit comes second. So that is good. If you are trading, make sure you target to make sure your capital is safe. If your capital is safe, then you don't have problem. The next thing, any money you make from that time, you know is your own. You're not trying to recover your loss. You're trying to make more profit. So now, when you try to protect your capital first, you will see that any trade you are making, your profit will be going well because you are always conscious of your capital. Because if your capital is gone, you will not be able to trade to take any trade again. And you'll be seeing setups. You can't take the trades. So now, number 4, best time trading trade sections. The market has 3 main active sections. Number 1 is London section. London section, which is 7 a.m. to 11 a.m. So that 7 a.m. is our own 8 a.m. here. London section, they open 7 o'clock in their country, but their 7 o'clock in London section is our own 8 o'clock. So anytime you are trading, make sure that 8 o'clock, which they also call 7 o'clock in their own place, is our 8 o'clock here. So 8 o'clock Nigerian time is London section. And when you are trading, you should be targeting these time zones. This is when the market volatility or markets start moving well. This is when liquidity is most active in the market as a trader. So most volatile and liquid, best for GBP, Euro, and gold pair. So now, if you are trading GBP USD, any trade with GBP or any trade with Euro, you know all these things, they are just European countries. Any European countries that falls under London section, if you are trading the currency that time, you see that the market is moving nice because they are all active. That is their own morning time, which is 7 a.m. in their time zone. In their time zone. So now, New York section. New York section normally starts 12 p.m. to 4 p.m. So their 12 p.m. is our 1 p.m. in Nigerian time. So if you are in Nigeria, it means New York section starts 1 p.m. But as a trader, you should be active even before 12 for you to look at the market condition before the traders of New York section step in. You have already know the structure, the market movement, and everything happening. So all these things, you have to take note on them. And then in that New York section, any USD pairs, anything, let me say any major pairs, not USD, major pair, you know what major pair is. Any major pair in the market, you see that is volatile that time, and the market normally makes the bigger move in the entire forex market during this New York section. That is when the big banks step in to the market. So as a trader, you should know all these time um, these time sections, you should know them as a trader. So join with London overlaps, best volume of the day, good for USD pairs, gold, and indices. Avoid trading during low liquidity time, Asian session, unless you are scalping. High impact news on less experience. So now, what this place is talking about is that when you are trading during this time, Asian section, there are no much liquidity. Asian section normally start from I think 11 or 12 o'clock in the midnight. So early in the morning, the time for trading in Asian section come to end. I think 7 o'clock or so. So when you are trading this time, just know that you will lose money that night because there are no much liquidity. The markets do much more of ranging during Asian time. Asian time. So now number 5, entering strategies for beginner. Some simple, reliable entry styles. Break and retest, just like I taught you. This is a break. This is a break here. This is a break. And where is the retest? This is the retest. When you see that break, you take this retest from here. this retest. Your stop loss should be here. And then you target where? The equal low, which was somewhere here in 4 hours time frame. You target your equal low, which is here. As a trader, you don't have problem if you know all these things. You will hit a clean TP if you know how all these things works. This is it. This is the simple aspect of it. After a break, expect the market to go back, test this level, and then fall back again. This is how to take it. Now, I'm done in that aspect. It's simple as that. Now, which other aspect again? Change of character plus break of structure entry. Please, can you all hear me?
Yes, sir.
Okay. Change of character plus break of structure entry. After a change of character, a new break of structure enter with the trend. So now, where is the change of character? You already know all these things. I'm just doing it again. So now, let's say this is a change of character here. This is a change of character, this place. Because there was a break from this place, this place. Since there was a break, what are you supposed to do? You enter this place. Break or structure, change of character. This is a change of character because a break this low, change of character, and then retest. This is the retest, and this is how the market started falling down. Go back for retest, and then fall again. This was the retest after breaking this place. After breaking there, go back to retest and then continue. Even if you enter there to target that low, you still make your take, you still hit TP. You still hit clean TP. Now let's move on. Which other one? Other block entries. Identify the last bullish bearish candle before BOS, and which is break of structure and entry zone. What is your other block? This is still your other block, just like I taught you. This place. This place is your other block. The last candle that creates change of character or break of structure is your other block. This was a change of character. And since this is a change of character, where is your other block? This is your other block. You mark it like this. This is your other block here. Your other block. When you mark it straight, it will fit into that place. You see, it's your other block. And then even if you are setting your limit, you can set your limit this way. And then your stop loss here. You target that same place. What of for buy? What of for buy? What of for buy? What of for buy? Let me look for the one for buy. If you are buying, what of another one for buy? Other block for buy. This is another other block for buy. Can you all hear me? Can you all hear me? Can you all hear me?
Yes, sir.
This is your other block.
Yes.
Yes, sir.
This is your other block. This is your other block here. And when you spot this, what are you supposed to do? You take your long from this place, target this up, target this high, and then your stop loss should be below here. And what happened? The market will still play nicely to your TP. And then maybe if you miss here, this is what you can still do to take this entry. This can still be your other block. From here, you draw it to here with this candle, this smallest candle. And then what? You can take your entry from this point to still this point. You still make same money. So this is how other blocks work. So in simple terms, other block is where buyers orders are or sellers orders, waiting for market to get to that level, and then they start buying or they start selling. So you guys should still put this on your mind. What is order block? Order blocks are where the orders for sellers or buyers are being placed, waiting for the market to get to that point before the sellers or buyers step into the market. So now let's move to support and resistance. Support and resistance, which is entry. Wait for rejection or confirmation candle at key levels. Always wait for confirmation. Patience gives precision. So now, support and resistance. So I taught you what support and resistance is. This is your support here. No, this can also be your resistance level, this place. Because after the price gets this place, it was unable to break above, still drop back. And then after going, still went back to break finally. That was your resistance, support, and resistance. So this can also be seen as support and resistance. This is your support, this is your resistance. Because when price get here, it will bounce up. When it gets here, it bounce up, it bounce down, bounce up, bounce down, bounce up, before it finally broke this place. And then what happened after breaking, it continues the trend. So this is support and resistance for you.